Suddenly, everyone is asking the same question. Is crypto crashing? Or is this just panic? Let's start with what actually just happened. Not rumors, not panic headlines, but real price action. Bitcoin, the king of crypto, fell below $70,000 again and even dropped to around $60,000 at one point before bouncing a bit. That was the lowest level we'd seen since late 2024. And Bitcoin has erased about 50% of its gains from its all-time highs in late 2025. This isn't a small drop. This is a huge move. Meanwhile, Ethereum, XRP, and other major digital coins have also slumped. Even coins that used to seem unstoppable are now sliding into lower price zones. And let me tell you something right now. When Bitcoin, the biggest and most watched crypto, falls like that, the whole world feels it. People start to panic. People start selling. But here's the real twist. This wasn't just one bad day. This was a series of sharp sell-offs, sometimes emotional, sometimes structural, that piled up all at once. To understand this crash, then why we need to peel back the layers. And the first layer is this. Crypto today is not the same as crypto 5 years ago. Back then, people treated Bitcoin like digital gold. They said it would replace banks. They said it would change the world. But in 2026, Bitcoin and other cryptocurrencies are now tightly connected with global markets, especially stocks and risk assets. That means when stocks wobble, crypto usually wobbles harder. Recent weakness in tech stocks and broader financial markets has dragged crypto downward too. People sold risky assets, including crypto, to protect themselves. And what makes crypto so sensitive is this. A huge part of the market is leveraged, meaning people borrowed money to trade bigger positions. So when prices drop, those loans get forced closed in, what's called liquidations, which causes even more selling. Imagine a domino line. One falls, then another, then another. That's exactly how the crypto market crash unfolded. And here's something many people overlook. This crash didn't happen out of nowhere. It followed prices that had gone up too fast, like a balloon that got filled with too much air. When it finally popped, the fall was violent. So let's break this down into simple pieces. Most people think of a crash as one big catastrophe that suddenly hits out of the blue. But the crypto crash of 2026 has been a slow build-up, followed by sharp drops, followed by more fear, which feeds itself. Day after day, Bitcoin slipped lower. Day after day, traders liquidated positions. And after day, headlines screamed crash. And every time people read those words, more panic sold. Let's make this relatable with an example. Imagine you are in a classroom, and someone loudly says, "The test is today." Even if it's not, suddenly every student starts reacting, sweating, panicking, whispering. Now imagine this on a global scale, except the test is the future price of Bitcoin. Emotions spread faster than facts. That's human nature. And crypto markets, more than almost any other market, react to emotion. So when prices start falling and fear takes over, selling snowballs into more selling. But here's a question to make you think. Did fundamentals suddenly collapse? The answer isn't that simple. Some people will tell you Bitcoin is fundamentally broken. Others will say crypto is dead forever. But the truth? It's often somewhere in the middle. Here's what we know. Bitcoin still exists. People still trade it every second. Ethereum is still a functioning network. Blockchains are still processing transactions. So what changed? Investor sentiment changed. And that shift has real consequences. People pulled money out. Big holders sold. Leveraged traders got wiped out. And suddenly, prices that once seemed untouchable, like $100,000, felt far away. Some analysts now call this a bear market, meaning prices are trending down rather than up. Bitcoin breaking below levels like $69,000 has been seen as a technical sign of this shift. Now let's talk about something curious. Even after the big dips, the market sometimes jumps up again. Bitcoin bounced back over $70,000 after one of the worst drops, showing that not all hope is gone and that bargain hunters are still active. This is important because it reveals something every investor should know. Markets move in waves, not straight lines. Like a roller coaster. After going down steeply, there are often recovery attempts. And guess what? Those recoveries create confusion. Because it means the market isn't simply crashing to zero, it's oscillating. It's unstable. It's unpredictable in the short term. That's why crypto feels like chaos right now. And here's the big psychological twist. When prices start bouncing after deep drops, many news think, "Oh, it's over. Prices are going back up." By now. But seasoned investors know a rebound doesn't always mean the bottom is in. It might just be a short squeeze where prices rise rapidly. Because short sellers cover their positions and then real selling pressure resumes. Markets often trick you into thinking the worst is over before it really is. That's why panic and hope coexist in crypto sometimes within the same hour. And yes, panic is contagious. Fear spreads faster than logic. Now let's take a step back and ask, Why did this crash hit so hard? Here are the main forces at play. 1. Liquidations and leverage. Massive forced sell-offs hit when prices fell, causing a feedback loop of more selling. 2. Risk-off sentiment. Investors are moving money out of high-risk assets, like crypto, towards safer options like gold or cash. 3. Macro market pressure. Tech stocks, global markets, and economic uncertainty have weighed on risk assets, and crypto is sensitive to all that. 4. Shift in investor behavior. Long-term holders sold because they thought prices would fall further. 5. Emotional selling. Fear makes people act quickly, sometimes without thinking. Markets feed on that. And here's the part that most people don't talk about. Crypto today is much more institutional than before. Yes, retail traders still matter, but institutions, big investment firms, funds, ETFs are part of this now. And institutions tend to react differently than retail holders. When institutions see risk rising, they reduce exposure faster. They take profits sooner. They can trigger mass outflows that accelerate market declines. So this crash wasn't just crypto traders panicking on Twitter. This was money from big players shifting out of crypto. And that matters a lot, because institutions have deeper pockets, and when they exit, prices react more strongly. But remember something important. Just because a market goes down doesn't mean the technology is dead. It just means prices have shifted, sometimes violently. And violent price swings are common in crypto, probably more common than in stocks or bonds. Now let's imagine something. What if this crash was like a storm, heavy rain and thunder, but eventually clearing skies? Storms are loud, chaotic, and scary. Everyone reacts emotionally during storms. But storms pass. Crypto markets might behave similarly. Right now, we're in a storm of fear, leverage, and uncertainty. And during storms, you see patterns you don't see in calm weather. Big swings, sudden drops, unexpected rebounds, extreme reactions, sharp liquidations. But here's a curiosity gap for you. Storms don't last forever. In major markets, even crypto, have cycles. They rise, they fall, they correct, and they recover. We saw this in 2018, 2020, 2022, and now again in 2026. Cycles repeat. Understanding this is key to being calm rather than panicked. Now let's talk about perspective. Trump's pro-crypto sentiments earlier helped push prices higher. But now, geopolitical and economic uncertainty has changed sentiment, and traders have less confidence on the sidelines. The market doesn't exist in a vacuum. It responds to world events, economics, and psychology. Crypto doesn't behave like traditional assets because it doesn't have a central bank or guaranteed cash flows. So when confidence falters, prices react harder. Now here's something to challenge you. Most people think crypto either goes to zero or to the moon, but the truth is almost always somewhere in between. And when people expect extremes, that's when volatility spikes. That's how we got here. So let's answer the big question. Is crypto dead? No. But this crash has revealed something important. Crypto is still highly volatile, still tied to leverage, and still deeply sensitive to market fear. Prices can fall sharply or rebound based on sentiment, leverage flows, and macro trends. And that's why this moment feels so intense. At times it feels like the bottom has hit, and other times it feels like the worst is yet to come. Both could be true in the short term. So here's the honest reality. The 2026 crypto crash isn't just a price movement. It's a market transition, a shift from shallow hype to deeper evaluation, from hyper-leveraged speculation to realistic positioning, from emotional trading to institutional strategy. And yes, that transition is messy, loud, and unpredictable. But it's not the end of crypto. It's just the market resetting expectations. Now let's bring this home with one final idea. Markets don't crash because prices fall. Markets crash when confidence breaks. Right now, confidence has fractured. But history shows us something. Confidence can be rebuilt. After every major downturn, crypto included recoveries eventually came. But they didn't come overnight. They came through time, clarity, patience, and understanding. So if you're watching this crash, don't watch it with fear. Watch it with curiosity. Watch it with context. Because the biggest opportunities in finance usually appear after fear spreads. We saw this in stocks. We saw this in housing. We saw this in gold. And one day we'll look back at this crypto storm with clarity too. Here's the bottom line. Crypto is going through a rough patch. Prices are volatile. Sentiment is weak. But the market is still alive. This crash didn't kill crypto. It revealed how markets behave when expectations shift. And winners won't be the ones who panic. Winners will be the ones who understand the cycle, see the pattern, and think long-term. If you found this explanation helpful, and if you want more simple breakdowns of big financial topic, hit the like button, subscribe now, and turn on notifications. Comment below with your biggest question about this crypto crash, and I'll answer it in the next video. Thanks for watching.